Microsoft is one artificial intelligence stock down 18% that I think you're going to regret not buying on this dip. I'm going to explain why I think that's the case in this video. So let's begin. Starting with looking at Microsoft's annual revenue, you see its growth has exploded from a little under $80 billion in 2013 all the way up to $198 billion in its most recent fiscal year. Now, it has made investments in artificial intelligence and OpenAI's ChatGPT. It's already begun to infuse many of its products with the LLP model that ChatGPT uses, and if it can make inroads with ChatGPT infusing namely its Bing search engine, which has very small market share worldwide, if it can improve just the search engine alone, if it can take some market share away from Google, that will be a huge boost to Microsoft because that's a very high margin business. If it can make inroads there, the revenue growth in that area is a high margin, high cash flow business. So it's just in the early stages of using these developments in artificial intelligence to infuse its products, and it really has a lot of potential because if you think about it, we're using Microsoft a lot when we're working, right? We're using Microsoft Windows, we're using Gmail, we're using Microsoft's productivity suite, Microsoft Word, Microsoft Excel. And so if it can really enhance those products with artificial intelligence, make them even more user friendly, that could be a big deal. Now, quantifying that will be difficult, but it just an tailwind that could boost those products even more than they already are. So that's really something that investors can look forward to because Microsoft was already an excellent business. Now, with this potential from artificial intelligence, there's no telling how much better it can get. Look at its operating profit margin over the trailing 12 months. That had dipped all the way to 2016 and then had begun to increase again as Microsoft really started to roll out the cloud services. And now it's at a very robust operating profit margin of 40.58%, even after coming down a little bit off the peaks of 2022. It's still extremely robust at 40.58%. And then if you look at Microsoft cash flow from operations, that has shown a very nice increase upward as well over the last decade, going from, sorry, that was the 5-year chart. This is the 10-year chart. Look at that growth, growing from 30 billion in cash flow from operations in 2013 all the way up to 84.4 billion as of its most recent update in the trailing 12 months. So the company delivers excellent revenue growth, excellent profit expansion, and excellent cash flow from operations. Really the trifecta, the three things that I look for when I'm looking at investing in a stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. And finally, the last reason why I think that you might regret not buying Microsoft stock on this dip is because of the favorable valuation. Microsoft is trading at a forward price to earnings ratio of 26.25, which is on the lower end of its average over the last 2 years or so. And it's on its way upward. You see, it's already begun the upward track. And so this might be one of the last opportunities you'll get to buy this stock at a favorable valuation. So for all of those reasons that I mentioned in this video, that's why I think that Microsoft is one AI stock that you're going to regret, that you might regret not buying on this dip. All right, so that's all I've got for this video. Thank you for watching. I've selected some videos that I think you'll enjoy, so let's continue this journey. Click on one of those videos and I'll see you there.